Hello, Joanne Bonagawa here from freedommompreneur-by-design.com, jumping on to share with you book 2 of my Read a Book or More weekly challenge for a year or more, creating that habit of reading. So book 2 that I read was this one, The Ultimate TFSA Guide. I actually own his first copy of his book on TFSAs. And it was in the library, and I came across this one. I thought, oh, I'll read this one too. I didn't know you had a second book. And so you can see I borrowed it from the library. And it was a pretty good read. I give it like a B. And I give it a B from the perspective that I've read and I know a fair bit about tax-free savings accounts. So I thought some of the material in here was pretty basic. So if you are a complete novice to tax-free savings account, then this is a great book for you. If you are intermediate to advanced, there's still some really great content in here, and I still recommend reading the book, but be aware you might be flipping through a few pages because you're like, oh yeah, I know that. So I took some notes just to help me make sure I cover the key points that I took away in terms of a summary of the book. So first up, I want to talk about the top chapters that I liked in the book. So there was one where he went over scenarios for the TFSA versus the RRSP, thumbs up. There was one where he went over how to use it to ease tax burden for seniors. It was called Tax Relief for Seniors, thumbs up. He showed some really great content in the chapter where he shows how you can save taxes by splitting income using a tax-free savings account. He went through some tax saving strategies by using these accounts. And then this may be a little bit morbid for some, but he also tackled the topic about passing on and how you could use a tax-free savings account when you pass on and things you need to know when you are passing on and you have a tax-free savings account, what happens to it. Okay, so for me, the key thing that I really liked about this book is that he really was really good at clearly saying when a tax-free savings account is better than an RRSP and when it isn't. And also when they're equal, right? So when the TFSA is better, when the TFSA is worse, or when they're equal to the RRSP. And there's 3 key components. So 1, when your tax rate is high, is expected to be high after retirement, higher than what it is now, then a tax-free savings account is better than an RRSP. When your tax rate is high now and expected to be lower in retirement, then an RRSP is better than a tax-free savings account. And when the tax rate is expected to be the same in your working years versus retirement, then the tax-free savings account and the RRSPs are equivalent, right? I have some notes here. You know, people think, so when is my tax rate going to be higher when I retire? Well, there could be many scenarios. For example, you could have an inheritance, a significant inheritance, and the income from that inheritance, it could be cash that you invest, it could be inheritance in terms of property that you rent out. That income could push you into a higher tax bracket in your later years. You could move to a higher tax rate province in your later years, or you could have started your own business or have progressed. Well, I'd say primarily started your own business, but you've grown your passive income streams in the sense that you're getting more income than when you initially started. Because you know those first years in business, you are really working hard with minimal results, laying your groundwork, and then in the later years, you're going to see that return of your investment. Okay, some other key things where the tax-free savings account is clearly better than the RRSP is for those who have a pension plan. So you know, when you have a pension plan and you get your slip at the end of the year, for every dollar that is invested in your pension plan, you have that pension adjustment that reduces the room you have in your RRSP. So in that scenario, sometimes you may not have any room in your RRSP, and in that case, if you want to shelter your savings from tax, then a tax-free savings account is the way to go. It can also be a supplement, because maybe you do have a little one, but you don't have a lot, and you have additional cash you're trying to maximize the return on, then you can put it into a tax-free savings account. The other key scenario where a tax-free savings account is beneficial is if you're a modest income Canadian. So for example, where perhaps you're paying little to no taxes and you think that will be your situation, you know, throughout your life, then you know, there's really very little benefit to putting your money into an RSP. You might as well put it into a tax-free savings account, particularly if you put your money in your RSP and then take it out, and that income in your latter years could impact the benefits, or the government benefits that you get in your latter years. While if you put your money in a tax-free savings account and take it out in your latter years, that is not at all included in any calculation to reduce any benefits that you receive. If you have no earned income, you're not going to have any RSP room, so the tax-free savings account is your only option. The alternative that I really liked, where he gave a really good scenario and walkthrough about when an RRSP is better than a tax-free savings account, is the beauty of the home buyer's plan. So if you are saving to buy a home and you're looking to save quicker, then it's best to put that money in the RRSP, because then it's not taxed, right? And it can grow faster on tax. And then you can take it out tax-free again to buy your home and then pay it back in small increments over a long period of time back into your RRSP. So if you were to save that money in a tax-free savings account, well, before that money gets in your tax-free savings account, there's a big whack that goes to taxes. While if you put it into an RSP, you eliminate that first whack, and allows you to get quicker to your goal, whatever deposit goal you have for the home you're buying. Another great instance where an RRSP is better than a tax-free savings account that he talks about in this book is when you want to make a large contribution. You know, the room in the tax-free savings account is pretty small compared to what it can be if you are a high income earner. You know, it's 18% of your income, while the tax-free savings account room is the same maximum for anyone regardless of their income. So if you have a large amount to invest and you don't have accumulated room in your tax-free savings account, then the RRSP is often the better choice because you have so much room that you can use. I talked about his chapter on tax relief for seniors. Really recommend, if you are a senior or if you are headed close to retirement, to get this book and read it and discuss it with your financial advisor, discuss it with your families, educate yourself. And in that chapter on tax relief for seniors, he really talked about, you know, when you have an RRSP and you're converting it at the end in your retirement, you convert it to a RIF, there are minimum requirements of income you have to take out of your RIF on an annual basis. And because you have no control there, or you know, it boxes you in a bit, that income, depending on the other income sources you have, can push you into a higher tax bracket, or can push you into a level of income that the OAS clawback applies. While again, if you have that money in a tax-free savings account, you're not required to take out any minimum, and then when you do take it out, it does not impact any income calculations for any benefits. So if you anticipate that you're going to be on the borderline, or that you're going to be just there where it's going to be clawed back, then it may be wise to move your savings into a tax-free savings account while you are heading over to the conversion stage, or start stop putting money in your RSP and start putting in your tax-free savings account to minimize that impact. Again, if you are not familiar, grab the book, read both of his books, educate yourself, or find yourself a suitable financial advisor. Another great thing he talked about, and I talked about this in the chapter that I liked, were, you know, tax saving strategies. And it talked about if there's a high income spouse and there's another lower income spouse or a spouse that is not working, the tax-free savings account is a great way for that high income spouse to, again, save additional funds tax-free to grow quite well, and also to income split by giving the other spouse money to put into their tax-free savings account and also grow. And you know, if you start early, the compounding effect for both of those accounts, be it the high income earner or the no income earner, low income earner, is huge. What other points? So I talked about the passing on thing. One of the great points he mentioned is that with a tax-free savings account, it becomes a little bit easier to pass assets on when you pass away. And so you can consider to use your tax-free savings account to make the passing on of inheritance tax-free and simple when you do die. It does talk in the book, he goes through, because you know the laws around tax-free savings account are different by province, so it's best for you to research. And he mentions, like, if you live in Quebec, which I do, you want to make sure you name your spouse or partner, because that's the easiest rollover for Quebec residences. To end this book review and summary off, he talks about what are the best things to hold in terms of investments in your tax-free savings account. And ideally, you want to hold something that earns you income or earns you something that would be taxable that you want to avoid. So one of the key things that I really like that he talked about is dividend income, and the fact that if you do have dividend income, this is actually not a type like dividend stocks. This is not a type of investment that is ideal in a tax-free savings account because we have that dividend tax credit. It's actually best to hold that in an unregistered account. The best type of asset to hold in a tax-free savings account is, number one, an interest-bearing asset, because interest is taxed at the highest rate, and then number two, a capital appreciating asset. And it's definitely number two because there is a bit more favorable tax laws in terms of the 50% for capital appreciation. And also, you know, for any asset with appreciation, that appreciation isn't guaranteed. So there's a little bit of risk there. You might put an asset in your tax-free savings account that you think is going to appreciate, and it loses value, and you can't claim that loss against your other income. So bottom line is, thumbs up. I really believe tax-free savings accounts are a great tool in your wealth building and wealth retaining strategy. And I think I did a couple of videos already on this in my channel. I'll be sure to include the links to those videos below. And I think if you are someone who's young, living in Canada, watching this video, I really recommend to start early, put a little bit by a little bit, and educate yourself as you go along and improve your investment strategies as you do that. And by the way, he talks about if you do move out of Canada and you have a tax-free savings account, he actually recommends just rolling it up and taking it out, because of it's not really clear right now, at least in the time of his book, about the international laws and what other countries see the tax-free savings account, because it's pretty unique to Canada. All right, so Joanne Monigaba here. I hope you enjoyed this video. As I said, I'll include the link to my other videos on tax-free savings account. And if you haven't opened one as yet, I really encourage you to do it. And myself personally, what I'm doing is that I'm investing in precious metals right now in this day and age in my tax-free savings account. It is possible. I'll include the link for you to get a kit on how you can do that free of charge. I think the market is prime. And again, I need to do a disclaimer. I'm not a professional investment advisor, whatever you call it. This is me sharing a book review and my love of tax-free savings accounts and what I'm doing personally. You need to educate yourself. You need to make your own decisions. And if you feel you need advice, then seek out a suitably qualified person to do that for you. Joanne Bonigaba here. Have a great day and thanks for watching.